you, Commissioner, Managing Director Gramegna.
Good evening, everyone. Let me start by welcoming the Commission's recommendations for the euro area that have been endorsed today. This is a very important step, and it is critical that Europe sticks to its reform and policies in order to improve competitiveness, resilience, and financial stability. Let me also echo the President of the Eurogroup and the Commissioner to say that the discussion on the state of convergence of Bulgaria was very encouraging. So if all goes as scheduled, we will soon be able to start discussions with Bulgaria in order for Bulgaria to join the European Stability Mechanism in due course, as was the case in the past with Latvia, Lithuania, and Croatia when they joined. ESM membership is very precious for Bulgaria, as it will benefit from the solidarity of the European Stability Mechanism and of the safety net that it provides. And for the euro area itself, it is also very precious, as we will have a 21st country joining us. We look forward to working with the Bulgarian authorities. On the macroeconomic outlook, as ESM, I focused on how financial markets look at geopolitical situation and the impact on the macroeconomy. You could say that markets are increasingly reflected the heightened uncertainty in the markets. They have priced in some of the negative impact of the expected tariffs in Europe. As an immediate effect of those tariffs, there's going to be currency depreciation and trade disruptions that are expected to add to inflation in the short term. In a second phase, inflationary pressures are expected to ease because of lower expected growth in Europe. But much remains to be seen, as it is not clear how tariffs will be calibrated and implemented and for how long. And so this obviously makes reading the future even more difficult. As a result, markets seem to be adopting a wait-and-see approach. This uncertainty implies continued volatility in the bond market. We have seen substantial moves in bond yields, not only in the US, but also in Europe. Since September of last year, the 10-year Treasury bonds have increased 1% from 3.6% to 4.6%, reflecting expected inflation hikes. German bonds climbed almost 0.5% in the same period, from 2.1% to 2.5%, mainly due to spillovers from the US. So in the context of heightened uncertainty and a rapidly evolving global landscape, I would add that it is crucial to uphold and support multilateralism and multilateral institutions. Let me conclude by welcoming the Eurogroup work program that the President has presented to us at the end of the meeting. It is a very ambitious one, with stock-taking on a regular basis to measure our progress, which is an innovation which we as ESM welcome. And obviously, it is a very ambitious program. It also mentions completing the banking union, which is very important in particular for the ESM, as it includes the ratification of the amended ESM treaty with the common backstop, which remains a priority, and it also entails a discussion on the toolkit review of the European Stability Mechanism.